Hi, good morning, guys. This is Nabil Mattar, Premier Client Manager from IG. Thank you, Ryan, for starting off the webinar. And for those who came back from a couple of weeks, the first webinar that we conduct, thank you for coming back. Those that were new, just a quick update. We are planning to do this webinar on a weekly basis every Tuesday morning. A lot of feedback is appreciated, whether you like the timing, whether you like my voice, whether you like Ryan's hairstyle. So just send the feedback over so that we can tweak along the way. Yeah, because at the end of the day, this webinar is for you. So just a quick start. Now, Ryan start off mostly with fundamental outlook, macroeconomic themes, and things like that. Just a quick check. Can you guys hear me loud and clear? Just say something in the chat box. Okay, great. Thank you so much. All right, before I start again, let me just go through a quick disclaimer. Okay, so basically, this webinar is purely for information. Does not take takes into account specific investment objective, financial situation, or particular needs of any particular person. And IG accepts no responsibility for use that may be made of this information and any consequences. All right, so moving along. So really interesting week that we have with a lot of macroeconomic news affecting the markets. Now, let me just, the purpose of my section is I want to focus a lot on technical analysis, okay? Because it's good to know the news, but as traders, we want to know, where's the good entry, where's the good exits, where's support, where's resistance, where the buyers and sellers are. This is very important as a trader. And for those of you that attended this webinar or seminar for the first time, I just want to highlight to you that how I analyze the chart is based on a lot of price action, and essentially when I look at the charts, I always want to know whether the chart is going on an uptrend, a downtrend, or a consolidation pattern. Okay, because it is very important to know which market phase the specific counter or instrument is doing, so that you can apply the right strategies. Okay, so when we talk about price action, we are always looking for swings. Okay, so a uptrend is basically a series of higher highs and higher lows. A downtrend is a series of lower high, lower lows, and consolidation is a mix. Okay, I'll move on to the markets right away. So now I just want to start with indices. Okay, let me just let the screen catch up with this. Right, so I want to start off with the indices. All right. Meeting is, of course, we have the S&P 500. All right. So the reason why I want to start with that is because we are looking at key levels at the moment. Okay. Let me just bring this up. Okay. So if you look at the weekly chart of the S&P 500, okay, it's very clear. It's very clear that we have been stuck in this uptrend of a channel since all the way from 2013. Okay, so what we are looking at is last week we have formed a bearish engulfing candle. Okay, over here. Okay, and this is quite a significant candle. Okay, so what happened is that the market is doing something like this, is moving on a uptrend, higher low, higher high, higher low, higher high, higher low, slightly higher high, and right now is testing this level of support here. Okay, so let me just highlight the support I'm talking about. This level here I'm talking about. Okay, now it has broken the channel, no doubt about that. Okay, this is a weekly chart, by the way. This bearish engulfing candle has broken the key channel support. Now, right now, the key level we're looking at is at 1900. Okay, so again, whether is this a break to the downside depends on how this weekly candle will form. Okay, we have 3 more days for the end of the week, and if this candle has a nice bearish candle close below the 1900 level, then it's safe to say that the market has reversed. Okay, right now this weekly candle here is still not completed yet. Okay, but we all know that this whole level here was previous resistance, then support, and this area here might be support as well. Okay, so just bear in mind that because the week has not ended we need to see how this candle is being formed. So, but the weekly chart certainly looks that you might want to consolidate a bit. Okay, so how the market moves sometimes, right? Sometimes when it is on an uptrend for a long period of time, what it does is sometimes it want to consolidate before it decides what it wants to do. So there's a potential that it might want to consolidate into some kind of flag here. Okay, this is just a assumption. Okay, it might not happen, but just look out for that. Every time when the market goes through a bull rally or a bearish trend, when it gets exhausted, sometimes it tends to consolidate into some form of pennant or flag. Okay, right now it's not forming. Okay, but just keep a lookout for that. Okay, but let me take you to the daily chart. Okay, daily chart, we can have a closer look at the trend. Now, daily chart, you can see that. Okay, let me just wait for the screen to catch up. Okay, now daily chart, we can see that. Remember the channel? Okay, this was the channel support and it's been broken down. So daily chart, it has broken a key level of 1900 and is clearly on a downtrend already. Okay, it's just that you want to be mindful that this whole area here is weekly support. So for me, if for the week, if we stay below 1900, let me just zoom out a bit. You can see that 1900 is key. You see the previous resistance here, followed by support, and support broken, which might turn into resistance. So take the cue from the daily chart, okay? If the daily chart lives below the 1900 for the rest of the week, meaning that let's say it comes up and it tries to test 1900 and it falls again, then chances are we are looking at a reversal to the downside on the weekly chart as well, okay? But if the daily chart does go up above the 1900 level, meaning that if it goes back all the way above here and stays above here, then at the end of the week, we can safely say that the weekly chart, okay, this 1900 support is still valid. Okay, and we might look like we might look to form some kind of consolidation. Okay, so keep in mind how the charts are doing on different time frames so that you have a better overview of what's happening. All right, so that's the S&P 500 for you. Now let me take a look at the Dow Jones, all right, the Wall Street. Now, if you look at the weekly Wall Street chart, right, quite similar story to the S&P in the sense that it's testing a key support trend line here. Okay, you can see that the key level for the Dow Jones is around the 16,500 level. Let me just draw this up for you. Okay, you can see that this whole level here now is very important, right? Especially if you're analyzing a longer term charts. I'm looking at daily and weekly charts because my trade is normally swing intraday to swing trades. Okay, but it's always good to look at daily, weekly chart because there's less noise, and that's where you can get a clearer direction on what the market is doing. Okay, the time frame that you look at is very, very important, because if you are looking at a 5-minute or a 1-hour chart, then maybe you're a shorter term trader. Okay, if you're looking at a daily, weekly chart, maybe you're more of a swing trader. So it's very important to match the time frame to your trading style. I like the weekly and daily chart because there's less noise. I prefer clearer trends. I prefer clearer levels. But one thing to note is that the higher time frame you go, for example, daily or weekly, a support and resistance level is not a specific price, it is a zone. So why did I say that? Because looking at the Dow Jones chart here that we have on the weekly chart, I drew 2 lines here because I know that the support level is between this area. Okay, yes, it's quite a big range. It's from 16.3 to 16.4 thereabouts. But because I'm looking for potential swing to position type of trades, longer term trades, this whole level here is a support zone to me. Okay, so just one key thing to note: support and resistance or high time frames is always in terms of zones, not specific level. Yeah. So again, looking at the daily chart, very similar story that we have for the S&P and Dow Jones, which is why this week to me is quite a crucial week for the indices to see the direction for the next few months. Because for the Dow Jones, this is the level that we're looking at. Okay, and you can see that the daily is on a downtrend, and this is a weekly support level. Remember that 2 lines I drew here. So draw these 2 lines on the weekly chart for you to have a guide of what might happen for the next few weeks or months even. Because if it breaks this level, right, chances are it has broken a previous low. This is the previous low. Okay, right now where we are is not broken yet. It's still testing it. And but it breaks this low, it might go to find another low, probably about the 16,000 level. But if this low is respected, right, we might be even looking like some kind of consolidation pattern before the market decides whether it wants to continue trending up or reverse. All right, so that's the Dow Jones for you. Let me move on to the Hang Seng. Now, Ryan did mention about the Hang Seng just now, about what's happening in Hong Kong, the pro-democracy protests. Now, very interestingly, this week the charts is a bit more resilient, even though the protests continued. So what we're looking at now, this is the Hang Seng weekly chart. All right, this is the Hang Seng weekly chart. So if you can see the weekly chart, it's a very, very nice little trend line that's been supporting this trend from middle of 2012. Okay, you can see there's a one touch here, another touch here, a few touches here and here. Okay, when the Hong Kong protests broke out, and then when there were weaker China PMI and housing numbers, the Hang Seng tried to break through the support level of 22,700 or so. Okay, remember I told you that support and resistance, especially for higher time frames, is a zone and not a specific level. This is another good example, because look at how the candlestick tried to push through the support level. All right, it actually went all the way to 22,200 before shooting back up, forming a long shadow. So when I analyze such a chart, especially on a weekly time frame, this for me, the support is not broken. Okay, because a long shadow simply tells me that there were a lot of buying support over at those levels here. There were a lot of buy orders here. And when the market tried to push it down, a lot of buy orders got triggered and it immediately shot up and the candle couldn't close below the support. Okay, so to me, this support is still intact. Now the Hang Seng is in a very nice area because the levels are very well defined. You can see I drew it here for you. We have the trend line here. We know that the trend line is supported. And what we're looking at is around the 22,700 all the way to 22,580 area around here. Okay, this area is quite a decent area as well. If I show you the charts, give me a moment. Okay, you can see the number of touches from here, resistance, 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 and potential resistance here again. Okay, now the good thing is that we have very defined levels. So take note of this trend line as well as these two visual support and resistance line coming up to determine what will happen. Now, trend-wise on the daily chart, it seems supported, but I want you to bring your attention to a daily chart. Okay, daily chart, this is still a downtrend. Okay, because what it has done is simply it has broke this low here to form a very lower low. This is a lower high, and in price action theory, right? Okay, remember a downtrend is formed by a series of lower lows and lower highs. So if I look at the daily chart based on price action theory, this is a lower low, this is a lower high, and this level here, remember I drew this level on the weekly chart on the 23,580, 23,600 area. This is a key level for the Hang Seng, because if this is able to break upwards, right, then the daily downtrend has been broken. Okay, but if this level is respected, then what we are looking at is simply coming back down, either to test the bottom or to continue a downtrend. Okay, so 23,600 is quite key on the Hang Seng. If you look at the weekly chart, have this drawn on your chart, yeah, so that you can have a reference point on what's happening. Okay, so I know there's a lot of, the thing about Hang Seng, thing to know is that this the Hong Kong protest is in a very critical level, so anything might happen. So just be mindful when you're trading this, make sure that you're always protected with stops. All right, so that's the Hang Seng for you. Now moving on. Now, any questions with regards to the indices before I move on to other markets? Okay, let me see. Is your chart time to SGD daytime? No, this chart is based on GMT, okay, UK timing. Okay, Mr. Gose, for someone who is trading daily, which kind of chart to look at? Okay, good question, Ms. Go. Oh, sorry, KS Go. So sorry. If you're intraday trader, right, you might want to it's always good to look at the higher time frame chart. No harm doing that, so that you have a better overview. So what I suggest is you might want to start looking at the daily chart. Okay, you can move down to the 8-hour, 4-hour. But as an intraday trader, which chart you execute on is very important. Okay, because if you execute it on a weekly chart, when I say execute on a weekly chart, means you plan your trade on a weekly chart, meaning that let's say you think that Hang Seng is at resistance now, you sell right now. This is based on a weekly chart. Okay, so on a weekly chart now, the stop loss and take profit levels obviously is based on the bigger level of points or pips. Okay, you're looking at hundreds of pips or when it comes to a longer term trade. But for intraday, right, we're looking at what? 30 to 50 pips profit target with 30-50 pips stop loss, because at least 1:1 risk to reward, correct? So it's always good to look at high time frame, and once you form a bias, okay, so the whole point of looking at the weekly or daily chart to me is to form a bias, whether you are bullish or bearish. Okay, because once you form a bias, this way you can zoom into a lower time frame chart, like a 50-minute or 1 hour, and then you can plan according to the bias. Okay, now very often I see traders when they have no bias, okay, they just go to a 15-minute chart. So for example, if I go to a Hang Seng 15-minute chart, okay, I get so excited when I see so much bullishness here, all these green candles, and I just close my eyes and buy. Okay, if you don't have a bias, it's your tendency to do that is very high, because you do not have something to guide you, and you're just buying straight into resistance sometimes, and which might not be a good idea, isn't it? So what you want to do is use the high time frame chart, like daily or 8-hour or 4-hour, to form a bias. And if you're an intraday trader, execute it on the 15-minute or 1-hour chart, so that you can manage your trade accordingly. Right? Because at the end of the day, we want to try to align our shorter term charts to the higher time frames, because it's more respected. Yep. So just bear in mind that, which brings me to a topic. I've been speaking to quite a number of clients this few weeks. Let me just get a blank space here. And I noticed that a lot of times when we are bullish or when we're bearish, we tend to just jump into a trade without planning. Now, very simple rule. If you are bullish, you always look for support to buy. If you are bearish, you always look for resistance to sell. Sounds very simple, isn't it? But the main thing, a lot of us don't do it, mainly, I don't know, because we have no strategy or this psychology. But let me just give you an example, okay? Give me a moment. Let me just try to find my... Let me just give you an example. Now, if you are bullish, let's say the thing is nice uptrend, okay? If you enter a buy here, okay, and if there's potential resistance here, you are essentially setting yourself up for a trade that is very, very difficult to handle. Because yes, the momentum is up, it is bullish, but if you buy close to resistance, you're not giving yourself a good probability for the trade to work out or to succeed or to profit, because you're buying resistance. So even if you are in the right direction, right, what it normally does when it hit resistance, that it will normally come down, maybe mark around a little bit, and then it will continue upwards, which means that you need to be patient and suffer the pain of seeing your funds go down first before going up, because you're buying resistance. My question to you is this: isn't it better if we see an uptrend, let it come down to a certain level of support, okay, and then take it up from here? Okay, it's definitely more conservative, because if you buy a support, maybe your stop loss is at the previous low here, not too bad. Okay, but if you going back to this example, if you buy a resistance, okay, your stop loss is still at the same area, at the previous low. So this is option 1, and this is option 2. Just a bit something for you to think about in terms of how to enter your trades. Okay, because you want to have the highest probability of success when it comes to trading, right? You want to get the highest probability trades. So buying a support definitely gives you a higher chance. Now, some of you might say, Nabil, sometimes the market just go up and doesn't come back to support. So there are two things, all right? There are two things to look out for. Now, let's pick an example, okay? Let's pick an example from the current markets. Now you notice that the euro dollar, if you look at the daily chart, right? Okay, it has been doing this all the way. There's no bounce up to resistance level for you to take it down again. Okay, so some of my clients say, oh, Nabil, you said wait for pullback and wait for resistance to sell, but if you look at the euro dollar daily chart, it's just doing this. Where are my opportunities to get into the trend? That's where two things you can do. Number one, you can look at, zoom into a specific level here. Maybe this is a daily chart, okay, but you can go into a 4-hour chart or a 1-hour chart, and from there you can try to look for pullbacks to resistance levels to take the short from, so that you want to join the overall bearish trend. You get what I mean? So one option is to go to a lower time frame. Okay. The other option, if you are a bit more conservative and you just want to wait for daily pullback, then the answer is there's no trade there because the daily has no pullback. Okay, but there are other markets that they might have a daily pullback for you to trade on. Okay, you guys understand what I mean? Okay, if there's any questions, please shout out immediately, yeah, so that I can cover it on the spot. All right, so just a bit of insight because I'm talking to a lot of clients and I notice a lot of times their buyers might be correct, but their planning and entry is wrong, and it's very frustrating if you lose money even though your analysis is correct. Okay, how many of you encountered this before? As in your analysis is spot on, but you still lose money? Can I just get a few yes or no, just to see whether whatever I'm covering is relevant? Yep, I see quite a lot of yes. Okay, so again, it's very important to plan your trades. It's very, very frustrating. Trust me, I've been that boat as well. It's very, very frustrating to get your analysis spot on. Okay, but your entry, your trading is wrong. So that makes you a good analyst but a bad trader. Okay, there's no point in being a good analyst but a bad trader because at the end of the day, we all want to make money, right? So try to fine tune the trading side of things. Okay, if your analysis is good. But the good thing is that at least you got something going for you already, because being a good analyst is not difficult. Okay, you take about 6 months to a year. If you look at the charts every single day, you can be a good analyst. But being a good trader is tough. That's where the psychology comes in. It takes about 2 to 5 years or even more to hone that kind of psychology to be a good trader. All right. So enough of my blabbering. Let me go back to the charts. Let me see any questions. Sunil is asking, which 3 time frames works best in your experience? Okay, I don't like the word best, because in trading, the word best is quite it's not a good, there's no, let's put it this way, there's no holy grail, there's no best. Everything is in terms of probability and the type of trader you are. So if you ask me which time frames are more respected, I would say definitely the high time frames. A lot of banks and hedge fund companies trade off the hourly, the 4-hourly and the daily charts. I prefer the daily and the weekly chart simply because there's less noise. Okay, so I always start my trade planning by looking at daily and weekly charts so that I know what I plan to do first before I even zoom into the lower time frames. Because if I do it the other way around, if I start the lower time frames, sometimes my tendency is to jump into a trade which I didn't plan properly for yet. Okay, so I prefer the daily and weekly chart. It's always good to have some charts to form your bias. All right. So okay, moving along. Let me just get back my pen. Okay, so back to the weekly and daily chart. All right, let's move on to FX. Euro dollar. Let me see. Okay, now euro dollar weekly chart. Finally, we're making some form of pullback, isn't it? Look at how many bearish candles the euro dollar had. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 consecutive bearish candles. Okay, so if you look at this weekly chart, you notice that when this particular low was broken, okay, and this is quite similar to my example just now. It broke this level. It did not make any pullback. It just came down all the way. All right. In the normal market, whereby it's not really fundamentally driven, right? If the trend changes, what it does is that it broke a new low. Sometimes it will make a pullback and then it will come down further. But for this case, just boom, just like that. Okay, just one direction here. Okay, but this is definitely very bearish. Okay, it has broke a key low. Right now, it's just pulling back. Okay, and the key level you want to watch out for is the 128 around here. Right, it's a very obvious level that a lot of traders will be looking at because of all these touches here. Okay, you got a support here, you got a support here, support here, support here, and possible resistance here. Okay, so what the market might do here is take a key level at 128. It's a very, very strong resistance level. Okay, the last time when the price hit 128, the market pushed it back down. Okay, right now, let's see what happens at the 128 level. Okay, there are two scenarios that might happen. First scenario is it might test 128, might form a double bottom or high low, and then it might make a higher high and go to another resistance level, maybe all the way to, let's see, maybe the 131, let's see, 130. Okay, maybe the 130 level. Okay, this is the first, oops, sorry. Okay, this is the first scenario. The second scenario that might happen is that if the 128.00 level get respected, okay, it marked around here and it breaks a new low, okay, which means that this is a continuation of a downtrend. Now, whichever scenario happens, scenario 1 or scenario 2, it is very clear that 128.00 is still resistance. Okay, so remember, as a trader, you want to sell at resistance and buy at support. Alright, so to give yourself as high probability of success. So 128.00 level is quite key. Okay, now let's have a quick look at the daily chart. Now, daily chart, quite interesting. A bit of consolidation here. I wouldn't say there's a change of trend yet. It's just that this candle formation is quite interesting. You have a bearish engulfing followed by a complete reversal of a bullish candle. Okay, right now this level here, this is short-term support. It's not a good support there. I'm just pointing out around the 126.00. Okay, but don't forget 128.00 lies around here. Okay, so you see what I mean by using higher time frame, because sometimes the market is so bearish or bullish, the one time frame alone can't give you a good understanding of what's happening. Because if I just look at the daily chart, it feels to tell me that the 128.00 is a really, really strong resistance, isn't it? Because we can't tell much from here. But if you zoom out or if you go to weekly chart, then you can see the 128.00 being tested. So you see how different time frames assist. So there's always no harm looking at higher time frame just to have a better outlook. Okay, but the only thing is that when you plan your trades, please note that when you analyze different time frames, don't have too big a gap in between. Meaning that if you analyze on a daily chart, but place your trade on a 5-minute chart, for that the gap is a bit too big. Alright, keep it close together. So if you look at daily chart, and then you can confirm it with an 8-hour chart, 4-hour chart, and then maybe you place a trade on a 1-hour chart. Okay, don't just look at the daily and jump to 5 minutes. Okay, it doesn't make sense. Alright, so daily chart, okay, there's a bit of a resistance. Let me see whether there's a bit of a... Nah, this is not a really nice trend line. I will not look at this trend line. Okay, I'm still, just pay attention to 128.00 for the euro dollar to have a clear direction what will happen for the week. Okay, as long as we stay below 128.00 for the week, chances are the bears are still in charge. Alright, so that's the euro dollar. Let me go on to the pound dollar. Let me see if there's any questions. Thanks. Okay, so pound dollar. Okay, pound dollar, I drew something. Okay, now pound dollar, this is what I drew last week. Okay. Yep, this is a weekly chart of the pound dollar. Few key levels to look out for. Last week I drew the 165 and 163. You notice that the 163 couldn't break, long shadow, and then came down. These long shadows here were caused by the Scottish referendum. So a bit of a mixed bag there. Okay, I don't really like when there's a lot of news coming out into the markets because it causes a lot of noise to my technical level. So this was because of the Scottish referendum, but then the bears came back and pushed back all the way down. Now, pound dollar was supported at 15950 level. It's quite interesting level because I don't think it's a good support level. If we zoom out a bit, this is a weekly chart. Yeah? A stronger support level would be around the 15900. Okay, so based on 2 weeks, last month's low, okay, it's about 50 pips away from a better support level at 15900. Okay, but it doesn't matter. It is what it is. Okay, currently it is on a downtrend. Okay, but I drew this line here because it was a previous low. Okay, but the trend is definitely to the downside. Now let me just take a closer look on the daily chart. Okay, quite similar story to the euro dollar, except for the pound dollar, you want to use this resistance trend line to guide you on what might happen for the week. Okay, this was the previous low here on the 159.50. Okay, now this trend line, use it to guide you. If it breaks above it, most probably it will look to retrace to a higher resistance level, maybe back to the 163, which is a key level. But as long as we stay below this trend line, okay, chances are it might come back to test the previous low of 15950 level, or it might break a new low. Again, when it breaks the new low, the 15900 support is quite key to look out for. Okay, so this is a pound dollar. Any questions so far on the pound and euro dollar? These are two major currency pairs. Most of the markets this these past 2 weeks has been a bit consolidating, yeah. And the main reason is it has been trending for the past 1.5 months or so. Like euro dollar and pound dollar has been very, very bearish, isn't it? Okay, but right now it's a bit consolidating, simply because also the dollar index has retraced a bit. Okay. Now I'm going to use, let you take a look at the dollar Swiss chart. Now the reason, I mentioned this before, the reason why I use the dollar Swiss chart is because the dollar index chart is a futures market and the chart is not as nice in terms of the weekly chart. Right? We don't have enough data to look at the trend and the previous support and resistance. So I use the dollar Swiss as a proxy for the dollar index, okay, because Swiss is quite a neutral currency. Okay, so looking at the dollar Swiss weekly chart, right? Just take note that we have respected a level of resistance around the 97 level. Okay, didn't really hit that level, but it seems that it wants to retrace downwards. Now, to which level it will retrace to, there are a few key levels to look at. Okay, first level is around here, where we are right now, around the 95 level. Okay, if the 95 level is respected, then we're looking all the way to maybe the 94 level or so. Okay, but the main thing is these are the two levels. Now, it's definitely on the uptrend, very, very strong uptrend. Now, if the support gets respected and it starts moving up again, okay, now what do you think will happen to the pound dollar, euro dollar? Very simple. If the dollar index starts moving up again, the pound dollar and euro dollar most probably will start moving down. Okay, so always have an eye on seeing what's happening on the dollar index or dollar Swiss chart to have a better analysis of what might happen to the pound dollar or euro dollar. Okay, looking at the daily chart, you can see a bit of consolidating. Remember, I drew this support line around the 95 level here for the dollar Swiss, so around here. It's the first level support, if not around the 94, which is somewhere here. Okay, so just take note of that for the dollar Swiss. Okay, I have a question for Aussie dollar. Sure thing. Aussie dollar is really nice. Very nice levels to look at. Now, Aussie dollar. Okay, this is a weekly chart. Okay, let me wait for the chart to catch up. All right. So weekly chart broke a key low of 92 cents. Okay, this was fueled by a lot of bad China news coming up from China. Okay, and it has been on a downtrend since all the way to 2014 low of 86.60 around here. Okay, this is the year low 2014, and I noticed that the 86.60 level, a couple of times it tried to push it down. The market tried to push it lower, but it couldn't break. Okay, in fact, I was sitting in front of the computer looking at Aussie dollar during the NFP, and the NFP came out better than expected, which caused a lot of the dollar pairs to move down, like Aussie dollar, euro dollar. But interestingly, the 86.60 level was held. Okay, so what happened here now? This is a low to take note of. Okay, the next level of resistance that we're looking at, a very key level, is here around the 88.50 level. Okay, now zooming in on the daily chart. So weekly is on a downtrend, yeah, very clear downtrend. Okay, looking at the daily chart, okay, you can see that the 2014 low that I mentioned was tested twice in the span of 1 month within October. So it goes to show that there's quite decent support around the 86.60 level. Okay, right now it's just consolidating around that low and around this level here. Okay, but anywhere between 88.50 to 89, right? This whole level here is resistance to me. Okay, it's still bearish on the weekly chart. Daily chart is what I call consolidating. Okay, because of all this, there's no particular nice price action around here. But this whole level here for me is a potential resistance where the bears might push it down again. If it breaks these resistance levels here, then I need to relook at the charts because there might be a reversal or a push higher to a better level of resistance around 90 cents. But as long as we stay below 88.50 and 89 cents for the week, chances are that the bears are still in charge and we might come down to test the bottom or break a new low. Okay, that's the Aussie dollar for you. Okay, I have a question on dollar yen. Okay, let me just touch on dollar yen. Okay. Remember I told you, I shared you a bit of theory just now about not to buy into resistance and things like that. So some of my clients I spoke to, a lot of them got so carried away by the dollar yen strength a couple of weeks back that they bought it at 108, 109, and now they're sitting on losses. Okay. So again, it's always good to wait for a pullback or support level if you want to join a uptrend. So dollar yen now, last week's candle is bearish. Okay, definitely very bearish. I think yen gained some strength this week. And right now we're looking, now if you look at the weekly chart, right? Let me just zoom out a bit, yeah? Okay, if you look at the weekly chart and if you draw some form of support here where we are right now, it's really grasping on straws. There's not much support here. Okay, I mean there's not really a strong level. A stronger level will be if it comes down all the way back to the 105 level, maybe back to a trend line here, starts going up again. Okay, dollar yen weekly chart is definitely on a uptrend. All right, the key thing is where to look for support levels to try to take it up from. Okay, now this level here is not the strongest support level. Okay, a strong support level on a weekly chart would be around the 105.50, whereby there was previous. You see all the way here, we have previous support, previous resistance, and it might turn to support again. Okay, now if you look at the daily chart, okay, daily chart, it is in a downtrend because it broke this key low here. Okay, the first level I mentioned just now is where we are. Okay, around the 107 level. Okay, and you want to see how the daily candles form up around the 107 here. Okay, because the longer we take and the longer we stay above 107, chances are it might want to move up again. Okay, but you see the benefit of taking your trades at support level, because if you take your trades at the right levels now even if dollar yen want to reverse to downside, maybe it wants to go to 105. Normally what it does is that if it hits the support, it will tend to go up, form a lower high compared to this high here, form a lower high, sorry. Okay, and if it wants to come down, it will come down again. But if you took it at a nice support level, at least you are protected if it goes up. Okay, so just take note of the 107 level for the dollar yen. If 107 breaks, then maybe it wants to go to a better support level of the around this area, 105.50 to 106 level. Because on the weekly chart, the support, nothing much we can see here. The main levels are around this level here, 105.50, 106. All right, so just pay attention to the dollar yen. Okay, but weekly is on a uptrend. Daily is on a downtrend. All right, so I'm a bit more cautious when it comes to such markets because both time frames are telling different stories. Okay. Now I have a question here. In one of your seminars, you mentioned that for certain currency pairs in London time zone will set the range for the day. Oh yes, yeah. Thanks, Lina. I'll cover this next week if you don't mind. Basically, Lina was asking, one of the seminars that I did, I divided the charts into market opens. And interestingly, right, I don't have my slides with me now, but interestingly, if you want to try it, just draw your chart. So maybe you look at the London Open. For that, because it's an intraday strategy, okay, I'm just deviating a bit if you guys don't mind. So you can use a 30-minute or a 15-minute chart. Okay, go to a pound dollar. Okay, because it's this strategy is more towards the London Open. So go to a pound dollar or pound yen. Go to a 30-minute or 15-minute chart and try to draw a vertical line to see where the market opened. Okay, basically the strategy involves that normally when the London forms a high or low, the next two sessions, the Asia and the New York and the Asia sessions will not break those levels. Okay, so it's just some kind of strategy. I'll cover a bit more next week, but for you guys, what you want to do, go to a pound dollar chart, go to a 30-minute setup, draw your vertical lines and see how the market reacts to on the open. Chances are when a high or low is formed near the open, the next two sessions will not break it. Okay, just something, a simple strategy that I use as part of a bigger strategy. Okay, I'll cover a bit more next week, Lina, because I don't have my slides with me. All right. Now, Miss TC Tan, is there usually a slowest month for FX every year? Good question. I mean, there's a lot of theory surrounding not only Forex, but the markets, like, sell in October or things like that, or the Santa Claus rally. I'm not a big fan of such theories because especially this year, right? This year, the market, because of quantitative easing, has the dynamics of it has changed so much. All right. Traditionally, many times from March, April, May onwards, just before the summer holidays, the Forex market is the busiest. Okay, that means we have a lot of volatility. But this year, he has been so quiet for the first half, and a bit more volatility came back only from September, October onwards. Okay, so I really don't really like to use theories to generalize, because this year, because of the cheap money flooding the markets, it has been quite funny the way it reacts to things. So I'm always always using charts to plan my trades. Okay, it's just the dynamics of it. Even like how the USD reacts to news is very different. Sometimes it can be good, sometimes it can be bad. So I always tell my clients, use the charts to guide you. Try not to jump into predictions of what will happen to a currency pair if the news comes up better than expected or worse than expected. Okay, so something that you want to look at, because I mean, a simple case in point is the NFP. The most previous NFP, the October NFP, the news came out better than expected, right? So USD rallied. But if you look at September, the NFP, the news came out worse than expected, but the USD also rallied. Okay, so how do you predict such a move? You can't. So the only way is just look at the charts and see how majority of the participants want to take the trade, and then you just hop on and join the trend. It's easy as that. Okay, so it's a bit hard to gauge when's the slowest month, but on record, this whole year has been a very slow year for Forex. I mean, the past two, 3 or 4 years ago, pound dollar on an average daily basis moves anywhere from 150 to 170 pips on a daily basis. Okay, right now we're even struggling to hit 120 pips for pound dollar. All right, so this year especially has been quite low in volatility for Forex. Yep. Okay, let me just move on to commodities, gold and silver, before I wrap up. Now, interesting developments here. This is what I drew last week, during a couple of weeks back during the webinar. Now, the gold chart, right, has been making a series of lower highs. Okay, this is a weekly chart. All right, you notice this is June 2013, and then we've got early 2014, and then we've got mid 2014. So this is a series of lower highs, which means that there's a bit of weakness. Okay, if you look at the whole, you look at the gold weekly chart as a whole, this is what we call a consolidation. Okay, I can't really draw a trend line because it's not really a nice trend line. There's some touches not that nice, but what you can infer is almost like a wedge. Okay, but key level for gold is this, the 1180 level. Okay, this whole level here, the 1180 level. If it breaks that level, then chances are that we might start trending down further. Okay, but right now, interestingly, I think Ryan mentioned just now, because of a bit of panic in the markets based on Ebola and the IMF downgrading the war forecast in Europe and things like that. What happened? Gold pushed up a bit, and there's a nice weekly bullish engulfing candle form here. Okay, now engulfing candles on a weekly chart to me is quite a strong sign. All right, and for example, let me show you here. Now, if you look at the weekly chart, look at this here. A green candle followed by a bearish engulfing candle. Okay, if you guys don't know what an engulfing candle is, basically a candle that the whole body engulfs the previous candle. So this is called bearish engulfing candle. And you see what happened next? Comes down. Here as well, you see, first it was a bullish candle followed by a bearish engulfing candle. What happened next? Comes down. Okay. And for this case, what's happened here? We have a bear candle and we have a bullish engulfing candle. So I'm not sure whether it wants to go up. All right, maybe it wants to consolidate further. Maybe something. This is just an assumption. And maybe it wants to come back to the trend line here. Okay, so just something to infer. But the interesting thing is this: gold is still quite consolidating. I wouldn't call it uptrend. I wouldn't call it downtrend. It's consolidating on a weekly chart. Key levels to look up for is 1180 and this 1240 level here. Okay, if it breaks 1240, most probably we're coming back to this trend line. If it stays below that, then it might want to consolidate further. Okay, but interestingly, if you look at other metals like platinum or silver, okay, those are very much more bearish than gold. Where's my silver? Okay, let me just show you silver. Give me a moment. Yeah. Okay, now if you look at the silver weekly chart, you see the difference between silver and gold. Now silver, okay, if you see silver, right, same thing, same concept, lower highs here, lower highs here, lower highs here, lower highs here. So we know that the momentum is to the downside. Okay, not much bullish momentum here because for me it's series lower highs. But the difference between gold and silver is that the key level of 1850 area has been broken. Okay, right now we're making a bit of a technical rebound. Okay, but I'm very keen to see what the market would do around when it comes back to this support term resistance level around the 1850 level. Okay, because to me, silver has broke a key level. And when I say key level, if you want to talk about support and resistance, there's no better example than this. Because if I zoom out for you, okay, you see my line around the 1850, 1860 level. You look at number of touches here, resistance all the way from 2008. Resistance, resistance, a lot of fake outs here, resistance, support, 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 and support has been broken. Alright, so you see how key 1850 is. So even though gold is consolidating, silver, I'm casting an eye on it because it has broken a very key level. So I'm interested to see if it pulls back to this level here. We'll see what happens, whether the downtrend will continue or maybe it's just a fake out and will go back up. Okay, but right now it's very bearish. If you look at the daily chart, it's still bearish. It's just consolidating a bit. Okay, quite similar. The theme for most of the charts are quite similar at the moment, especially for the commodities and the forex pairs. It's a bit of a consolidating week because of strong trends that has happened for the past few weeks or so. Okay, so just have a keen look on silver as well because it's broken the key level. Okay, and I hope you can appreciate the difference between gold and silver and which one's a stronger or weaker metal. Alright, so I covered indices, I covered forex, I covered commodities. Any other questions you guys want me to look at? I hope you like this new format that we came out. So every week Ryan will start with a bit more fundamental macro outlook and some ideas. I will go more into technicals. The recording is actually on the website. Okay, we try to upload the recording within the same day. Alright, so if you want to go and view the recording, all you need to do is just go to the IG website. Okay. Oops, sorry, this is not the IG website. Okay, go to ig.com.sg, go to education and market talk webinar. Okay, education and market talk webinar here. When you click on it, okay, we will upload the webinar here. Yep, so this was the one that I did a couple of weeks back. Okay, moving on, if you want to register for future ones, it's all here. Okay, so this week onwards, we will split it into two recordings. All right, one is more fundamental macro stuff from Ryan, and the other side is more technical analysis, which is my part. All right. Okay, so any other questions? Lenny, how are you? Okay, stock. Which stock? I can cover one or two stocks. What's GILD? Okay, I know what stock is that. Let's see. For those of you, even though if you don't trade the stocks, yeah, you can try to use my analysis and try to learn in terms of how to analyze and how to spot trends. Is this the one, Danny? Gilead Sciences? Okay, now, okay, so I'm going to do analysis of the curve, yeah. So now Gilead Sciences now, very, very strong uptrend. Okay, immediately what I see is a key support level based on a whole number, 100, just because a lot of traders like whole numbers, like 100, things like that. Because it's so bullish, and I don't know whether how long this stock has been listed for, but I can't see any previous support. Let me go to the monthly chart. Wow, there's no... See, for stocks, when there's no past information, right, it's just super bullish. But this Gilead Sciences is a very, very bullish stock at the moment. Monthly is bullish, weekly is super bullish. Okay, because there's no past reference, right, the only thing I can look for are whole numbers. You notice how you acted off the 110? Okay, so right now, yes, it's bullish, but it seems that it couldn't break the resistance for the past 1, 2, 3, 4, 5, 6, 7, 8, 2 months. 2 months couldn't break 110, so it goes to show that there's quite a strong resistance around here, and it's consolidating between 100 and 110. Okay, so as long as we stay above 100, right, there's every chance that the 100 level will be supported. Let me have a look at the daily chart for a closer look. Yeah, daily chart, you can see that a bit of consolidation, you see? So it's a very simple analysis, okay? There's nothing much to look out for. Just look out for these levels, 100 and 110. What you don't want to be doing is trying to get your hands sticky in the middle, okay? Because somewhere in the middle is really no man's land. There's no analysis. There's no past analysis. So look at the extreme levels to gauge, at least even if the trend doesn't continue. If you get, let's say for example here, if you get it at the 100 support level, even if the trend does not continue the upside and break the 110 resistance, you can always trade the range and get it out at 110. So try not to get your hands sticky in between. Just look at 100, 110 level. Very simple analysis for Gilead, but it's a nice trending chart, and this is the kind of charts that you want to look out for because it's very nice and trending. Okay, so thanks Lenny for asking the question. So for those of you who wants to look out for Gilead Sciences, let me see, is it a trend line? Yeah, there's a bit of a trend line here that's been broken, but nothing significant because for me the 100 level is still holding up. Okay, 100 level still holding up. Just did this. Okay, just ignore 100 and 110. That's it. If it breaks below 100, then you might want to look at all the way till 95 for the next level of support. Okay, so that's Gilead Sciences. What else? Okay, Temasek or GIC, Singtel. Okay, I just cover a few more, yeah, because my time is almost up now. Singtel, okay, Singtel charts. Okay, Singtel charts. Now, this is a weekly chart, and for me, it has broke a new low. Okay, this was a previous low. It has broke a low. So this might be a start of a downtrend, and we can sort of infer that there's a bit of a double top here. Okay, let me have a look at the levels again. Support here, support here, support here. Okay, now Singtel has broken a new low for sure after making a series of double tops. So it is bearish on the downside based on the weekly chart. Okay, the things that is quite close to support. The support level is around the 3.68 level. Okay, so chances are the support might be respected from a lower high, and then from there we can see whether the downtrend will continue. Okay, this is a classic price action. All right. One thing to note is this. I think I see a form of trend line. Give me a moment. Yeah, I'm just doing off the cuff, so just spare me some minutes to have a closer look. Yep, this is a decent trend line. Okay, so this level here. Okay, just take note around the 3.68 level. Okay, this is strong support. So even though we are bearish, again, when we are bearish, we are looking for resistance to short, not support. Okay, so even though he has broken a new low, it's a bit close to support. Okay, look at the daily chart, same analysis. Okay, daily chart, has broken a key low here. It's just meandering down, okay? So hopefully we'll make a lower high and then continue downwards. But the weekly chart has a better analysis because you can see all the levels clearly. So Singtel, just take note of this support level. It's broken a new low, so this is the start of a downtrend, okay? But take note, we're close to support right now, around the 3.68 level. Okay, that's Singtel for you. Okay, I'll cover one more, yeah? Okay, thanks for the information, Mr. Teo. Temasek or GIC also have a stake in GILD. Maybe that's why it's so bullish. Oh, yes. My doctor told me the other day. So they are the producers for what? Medicine for hepatitis C. Is that what you're saying? Interesting. Yeah, that's what my doctor was mentioning. So Gilead Sciences, yeah, something interesting to look out for. So it's a very bullish chart. Okay, in fact, one of the most bullish charts I've seen for a while. Okay, so Yahoo. I'll just cover last one for Lenny. Yahoo, yeah. Oops, sorry. Steve Madden, no. Thanks, Lenny. So they got approval for Hep C. No wonder it's so bullish. Nice, very nice. Okay, so Yahoo. Okay, now I drew all these circles the other time because I think it was just post Alibaba trade. I think this whole rally here was caused by the Alibaba euphoria. Okay, and a lot of my clients bought Yahoo around 41, 42 even, and I say that it's buying straight at resistance. Okay, so right now, it is bullish on the weekly chart. Why? Because this high broke the previous high, and it broke the 2014 high of 41.65. So it is formed a clear higher high. The next thing is this. Right now, it seems to be retracing. All right, key level to look out for is this support level here of around $37, $37.10. Okay, because this key level here, we'll see whether we will continue to go higher or whether the level will be broken and we'll just consolidate back to the support around here. Okay, so this $37 to $37.10 will be a key level to me. Let me have a closer look at the daily chart. Okay, I think I drew this wedge last couple of weeks back. It sort of fake out and dropped below. Let me just take it away now. Okay, so daily chart, again, it has broke. See, daily chart is a bit more bearish, isn't it? Because it broke this key trendline support. Okay, same thing as the weekly chart. The $37 to $37.10 is a key level for you. Because the daily chart, you see a difference in analysis? Now, what the daily chart has done is this. It has formed a high here. It's from a lower high, and if it breaks this $38, potentially it form a lower low. Okay, so daily is on a downtrend, but on the weekly chart it tells a slightly different story, because in the weekly chart you can see that this high here is quite a significant high, and this level here 37 will be key level to look out for. If the 37 supported, most probably we're coming back up to test the highs of 40, 41, 42 again. If it's broken, then most probably this whole thing will be consolidating back down to $33 level. Okay, of course for stocks, right, there's a bit of earnings release coming up for this month or so, so always pay attention on when would that be, because the last thing you want to do as technical traders is to be caught on the wrong side of a news release or to be totally unaware when some news is coming out. Alright, so again, thank you so much for your time. We'll try to upload the recordings by today or latest tomorrow. If you have any questions, feel free to email me or Ryan. Okay, I hope it helps you in your overview for the week. Again, come back again every Tuesday, 10 a.m. Any feedback, just email it to us. All right, if not, happy trading, and we'll see you soon. Thank you very much.